Clubbing and aggregation of income. What is meant by clubbing and aggregation of income? The income which is being aggregated with clubbing of both or clubbing of all the heads of income is known as clubbing and aggregation of income. So what are the incomes we are going to go and learn in particular? Income from salary, income from house property, income from capital, income from business and profession, income from other source. These are the incomes which we have learned in particular to first unit, first sem to now. Now in individually we have given some exemptions particular to under income from salary under section 16.1, 16.2 and 16.3. These are the subsections we are going given as exemption. When we have given income from house property under section 24A, 24B, this is the standard deduction. This is not exemption. These are your deductions, which we have given as concluded with the total income from salary, income from house property. In the same concern, we have given exemptions under section 54. Here 54A, 54B, 54D and so on for calculating our capital gain. And income from business, we have gone through only income we have been considered. Income from salary also income. All these incomes are being clubbed into one condition, is nothing but clubbing and aggregation of income. So what is the income here we have learned in particular? All the incomes. Okay, well and good. If you are having any losses in particular to each and every one of the head, then what is the condition to be applied? Apply all the other heads of incomes or profits or incomes are being set off with the losses. The losses can be set and carry forward. How to set and carry forward? They are condition again. Income from salary doesn't mean the income. There is no loss in income from salary, but we can expect the loss in income from house property. So income from house property loss can be segregated with income from salary. The same scenario for capital gain. When I am considering with capital gain, we have gone through the capital gain of short-term capital gain and long-term capital gain. So when I am describing short-term capital gain, long-term capital gain, short-term loss can be set carry forward with long-term capital gain profit. But when long-term capital loss is there, cannot be set carry forward with short-term capital loss. Capital gain. So in this condition, when I am describing short-term capital gain, long-term capital gain, profit is there when can be considered as income. Loss is there, long-term capital gain can be minus from short-term capital gain. But short-term capital gain cannot be minus from long-term capital gain. Ante peddalo nunchi chinna tiyachchu gaani chinna nunchi peddadi tiyalemu. So what is the condition if you are having in the question paper, if your short-term capital gain is more than long-term capital gain, ignore, no need of writing it up. If it is long-term capital gain is less than short-term capital gain, you can consider as income from capital gain as a head of income. Now in the business condition, when I am describing in the business condition, there are three conditions: specific, special, non-specific. When I am describing non-specific, there will be written under the non-specific, no information will be given, only company name, description will be given. So that such type of incomes are business from non-specific. When they are describing specific in terms of specific deals with gold and silver, describing the content, the loss and profits can be set carry forward with the specific itself. But non-specific loss can be segregated with specified business, special business, but non-specific loss profits cannot be set or carry forward with special and specific businesses. So these are the heads of clubbing of income from business under the part 1. So in this condition we will be getting under 11A and 11B will be having 80C to 80U. The same condition will be applied as we have gone through income from salary, house property, capital gain, business and profession. We will be having 80C to 80U, which is nothing but deductions. We have done the problems in clubbing and aggregation of income. Now in the procedure we are going to learn 80C to 80U deductions. What are the deductions? We have gone through the deductions individually. 80C qualified savings, 80D medical claims. All these have been described in detail in your notes. Now when you are describing in detail your notes, the data whatever we have received, we are going to consider this total as total income. So total income is being calculated. With this total income, if the question is asked to calculate tax liability, then the condition again we are going to consider. If it is in the part income from salary, house property, capital gain, business and profession and other source, all the incomes are nothing but all the incomes are nothing but your total income. When the total income comes into consideration, now if we are having any capital gain, then it has to be deducted under the condition of long-term capital gain. There the tax liability would be as flat rate and other incomes under slab rate. Then we are going to concern with flat rate and slab rate. Whatever we are going to add as health and education has to be shown under slab rate. We have done all this condition in the problem in your notebook. If any doubts, you can again verify the video and again check it out, the content of the notes what we are described, and the same content will be described in the 4th unit, describing again assessment of individuals. There what you are going to do, same condition, income from salary, house property, capital gain, income from business and profession, other source with ATC to ATU deductions. Is that clear everyone? Thank you.